So welcome to another video. I'm really happy to have you here again in this short video series, Trading with Logic. It's me, Marcus from DowHow Trading, and I'm really happy that you watch this video, and maybe you want to subscribe this channel or you give me a thumb up. Thank you very much in advance. Okay, actually in this video series, for the last videos, we're talking about the word probabilities. Probabilities. And you know, in the last video, we talked about money, the moneta. And the other two words were, of course, in Latin words. That's the origin, the source of the word probability, probabilitas. And the second word was accidentia, which means you will never know how much money you can make because it's an accident, it's coincidence. In this probability word, there's included the word accident or accidentally or coincidence. And the third word in the last video we talked about was moneta, which means you will never know, you cannot know how much money you can make with the next trade. Therefore, the big term in trading, the big sentence, cut the loss and let the winners run, is the big one, and it's a big deal in trading. Now we want to go one step further, and we want to go really deep into this word probabilities, in this word corpus. We call it the word corpus. What does it mean? The real meaning of this word probability. In English, it's a kind of hard because we cannot divide it in different words, single words. So therefore, I use the German word for that. You can see it. The German word, if you don't German, if you're in English, then try to express it. It's Wahrscheinlichkeiten or Wahrscheinlichkeit, the single word. And it's Wahrscheinlichkeit. That's the English word probability. And in German, it's a little bit easier to divide this one word into different, to go deeper in the word corpus. So, and the first one, or the first part, like probability, is in German, the first part, and that means, is it true? That word means, is it true? We're talking about your signal, or we can say your strategy. Strategy, the right edge of the chart. Which means if you want to become successful with trading, then you know we talk about math, logic in trading. Why? Trading is pure math. Real trading is math because supply and demand has the source of price and volume, which means the volume on buyer or seller side, supply demand, is responsible for the next price. Yeah? Volume there higher, price going up. Volume seller higher, sales higher, then the price going down. Pure mathematic. No perception, no fundamental data, just pure mathematic. So which means if you want to become successful with trading, you need to figure out if is your signal or your strategy, is it true? Is it true that you can make money with your signal, with your strategy? That means you need a signal, you need a strategy. So let's take an example. You following one online, or you see a cool strategy in a webinar or in a seminar or whatever there is. Then you need to figure out, completely independent of the guy who told you this is a cool strategy, to figure out by yourself, is it true? Can you make money with this strategy? So now you have two options to test it and to investigate it, to have a look if this strategy is really cool, if you can make money with this. Two options. So the first option is you can make this true by a shortcut backtest with the PC. And of course, you can test it live, the right edge of the chart. But that's not all, guys. we have to go deeper, which means if you give the task to test if it's true to the computer and you want to make a back test, then you need more, because we're talking about math and logic. First option, your computer is asking you, what should I test for you? So let's imagine you could talk to your computer. Then your computer is, and you say to the computer, yeah, I want to see if it's true my strategy. Yeah, then your computer is asking you, what strategy? Yeah, I'm a computer. I need zeros and ones, which means I need a signal, which means I need clear rules, which means if, then. If this happens, then I can calculate how often it happens and about the result. So please give me rules. If, then. So, for example, you can talk to your computer and can you say, okay, this is maybe crossing moving average 50 to 100 or 50 to 200. Whenever this happens, please, I need to know how often and about the result, which means you need clear rules. You have to talk to the computer. You have to program into the backtest, entry and exit. Whatever it is, you need clear rules. Otherwise, the computer will test nothing for you because the computer is basically completely stupid. It's zero and ones, no more, no less. So you need, if then, you need rules. And then you say to your computer, you now test it. And your computer say, are you crazy? Yeah? What? When? Where? What should I test? Where should I test? Yeah, clear. You need a market. Yeah, you need a market, and you have to say, okay, please test it in Dow Jones or in Forex, Euro, Dollar, British Pound, Dollar, whatever. This is the market. Then the computer asks you again, yeah, got it. What time frame? I need a window. What time frame? And of course, which time of history? Clear. Which means you need a time frame. You can say, okay, please test these rules or those rules in this market in 4-hourly chart or hourly chart or minute chart or daily chart, whatever. And of course, please, history 2 years back. So now your computer says, got it, I can do that. So now, with this information, the computer can give you a back test. And now your computer gives you a result. And your computer says, after the back test to you, okay, your strategy, your signal came up in this market, in this time frame, in the last 2 years, for example, maybe 200 times. And in 70%, just an example, in 70% or 60% of all signals, it was a profitable trade. It ran into your exit strategy in 70%. Not 100. Then you would have a guarantee. Not 100. 70%. Do you remember the word accident, accidentia, coincidence? Which means 70%. The moment you have less than 100 means the order of your signals are coincidentally. They are coming up by chance. You will never know if the next signal will be a winner or a loser. And here we come. Now, we come to the consequences of that. You have to ask now, did your computer in this backtest make any time a mistake? Did he ever trail the stop loss wrong? Did the computer in the backtest ever trail your exit strategy wrong? And worst case ever, did your computer in the backtest ever miss a signal? And you know the answer is no, because your computer in the backtest made no mistakes. Not in trailing stop loss, not in the wrong exit strategy, nor, worst case, he never missed a signal. Now ask yourself, How many mistakes do you make when it comes to your live trading? And that's the point why 90% of all traders fail. The strategy is cool, made a positive back test, but after a time of live trading, you don't have the same result. And it must be the same result if you don't make a mistake. Why? Because the market never changed. Why? Because price and volume, the basis of the price development, never changed. Not in history, not in the present, nor in the future. Price and volume are responsible for the new price up or down. That's the reason why you can make a back test, because the basis of trading will never change. Has never changed, doesn't change, and will never change. And that's the reason why you can trust your strategy. But if you make one mistake, if you lose or if you miss one signal, you cannot expect that you have the same result. That's about backtests. Now it comes to you. If you say, no, I don't trust the history, I want to test it live, then guys, you have the same responsibility. If you want to test your signal live in a live market, you have to do exactly the same. Clear rules. If then, when a signal come up in the market, special time frame, for a couple of times. You need at least 200 or 300 signals that you can make a trustful result. Do you have that lifetime? And now imagine you find any strategy, online, whatever there is, and now you test it live. First of all, are you always there? Or are you in work, in your job, or you're with a family, or resting, relaxing, whatever? You cannot afford, because you have to be in front of the charts when the signal come up. So maybe you say, okay, I tested in daily chart. I have 1 year. Okay, now you test for 1 year in the specific market. Yeah, don't switch it. Specific market. That means after 1 year you figure out, oh, the strategy is not really working. Cool, right? Yeah, now you have a positive, you have a signal, you have a result, positive or negative, but then you figure out, okay, I lost 1 year of my precious lifetime. You don't know how long your life will be, so don't do that. And I hope you see about our word true, how to figure out if your signal or strategy is really, really working. But then consider the consequences. One mistake, one technical misdeed will lead to another result. If you miss one signal, if you make one mistake, the computer never did, you cannot expect that you have the same result. That's pure mathematics. Of course, if you can imagine, there are more words hidden in this word probability, and the second word we'll figure out in the next video. I hope you learned a little bit about probability, and if you want to go deeper, you will find the link to my online course here in the description of this video, and a couple of other links if you want to follow live webinars. Thank you for listening, for your attention, and as always, have courage and be kind, and may the force of the logic be with you. See you next time.